And we're back with another episode of Real Talk Atlanta. We are your hosts, Nika W.
I'm Ashley LeRae.
I'm Taisha Renee.
River the Realtor.
And ladies,
You're dragging it.
And we're back with another one.
Excited to be back.
It's that hair, y'all. Nika got some more hair, so she
It's
dragging
the
it
new hair
today.
for
Feeling
me.
myself.
Super cute.
I
love
my
it.
favorite style because you look beautiful.
oh, thank you guys.
Yes.
I love it. I love it. So how you guys doing?
Blessed.
Good.
I said last episode, don't stop complaining. I'm good.
I'm good.
No, because
I'm good.
today, literally, this week, real estate has been real estating, like
Yeah.
left to right.
As usual.
Mm-hmm.
And we doing it. We working. I love it. I'm happy.
I took
Life
my
has
first
been
week
lifing.
off this week.
Really?
Oh, good for you. You deserve
Okay.
it.
This is
You've
my
been working
first
so
time.
hard.
Yeah.
Thank you. This is my first week that I've taken off this whole year in terms of like not doing work, not going on vacation, checking my laptop. Like I have not been working. I've been under the weather, so I've taken some time for myself.
And you deserve
That's
it.
nice.
You gotta do that.
Sometimes.
Yeah.
You've been closing all the deals anyway, so you can take a
Right.
week.
Yeah, I love
You can
it.
put it
It's okay, y'all. August 1st.
I love it. River took off and I took off. Like I'm excited. I got 40 buyers approved this week, so I'm really excited. Yeah.
She in her bag.
Cheers. And shout out to these drinks. Cheers.
I saw y'all about to
like
tap the
this.
table like we had shots. Y'all
I'm
was
dead.
sweet.
Almost, but that just tells like we
It
are
all.
drinkers.
Right.
Look, going though.
Speaking of
So-
drinks, though, we got some new drinks on the table today.
Yes.
What we
For our
have?
viewers that tune in to us, you know, we usually sip on our champagne. But we got a nice little mixed drink today. We had someone send over some drinks for our episode. What y'all think about them? I got the Hennessy blend. It's called Black of the Berry.
I too have Black of the Berry. I'm a Hennessy girl. I love it. It's
Not us
delicious.
matching.
Right. We got
You
the Ruby Rose or Rose.
Yes, y'all. This
Love
drink
it.
is like getting us where we need to be. I don't know if you can.
We feeling comfortable.
Okay, shout out
Feeling
to
good.
Ways to Blend. We are going to put her information in our notes, so make sure y'all go and follow her on her Instagram. Her Facebook is WAYS2BLND.
Yes.
To book her for all your mixology services.
Yes.
Thank
Support
you,
these
girl.
businesses.
Thank you.
Support Black businesses.
Black-
Yes.
Absolutely.
You guys are okay. So today's episode, really recently, we've really been talking to our new realtors, and you
y'all
know,
been showing love.
okay,
Yes.
Shout out to all the new agents and
I love y'all.
everywhere.
We've been educating you guys, but I really wanted us to shift back to our buyers, because, and I know like we have talked about pre-approvals, we talked about upfront costs, but I really wanted to dig back into the nitty gritty of things that really hurt buyers when they're getting pre-approved,
Right.
and that process, and that all had to come with like when it comes to debt, you know, when lenders trying to pre-approve you. So today's topic is about 4 common things that hurt buyers when they're trying to get pre-approved.
Oh, I like that.
Okay.
Okay.
This is
Talk
good.
about it.
Yes, because
What's tea?
Oh.
I need to know.
What's tea? The previous episode talked about more like the requirements from the lenders and the realtor perspective, but
Right.
this is more like if you're struggling to get pre-approved, this might be the reason why.
Okay.
Good.
So the first one is student loans.
Child.
Boom.
I'm in this
What
and I
happened
don't
to
like
that
it.
being forgiven?
Okay.
Right.
That,
Quick
true
flex
that.
because I don't got no student loans. Oh,
Quick
Must be
flex.
nice.
I got
Can't
3
relate.
degrees. I have no student loans.
can't relate. Period. Boo.
Sorry, y'all. I'm
Cheers
so
to,
sorry.
oh, hold on. Cheers to no student loans.
Sorry, y'all.
What about you,
I
Ashley?
cannot cheers to that.
But
I'm
no,
sorry.
seriously, student loans is probably the death of all pre-approvals. Like a lot of my newer and first-time homeowners who just like graduated college, medical school, all of those things, they're like, I have $200,000 or 6 figures worth of student loans, and I'm like,
That's crazy.
unless you make 7 figures, we might have a little problem. But there are ways around it.
Yeah, most times when they do have that much, they're usually like doctors and lawyers. So they got the income, but it's kind of like, is your income going toward your student loan payment?
Right.
Or how's that working out?
I need a notebook because I need to take these notes, okay?
No. So sometimes a lot of people do forget about their loans and their student loans, and they
Yeah.
don't really think about it until it's time to purchase a home.
Right.
So recently I did have a buyer. Literally today I had a consultation, and her income was okay, but she had like loads of student loans, and to be honest, that affected her pre-approval. So what are some things that you guys advise your clients, especially when they're struggling with that part of the process when it comes to student loans? Like, what are some solutions that we can advise our future buyers out there to, you know, like really look out for when it comes to student loans?
I would say my number one is that income-based repayment plan, right?
That's important.
A lot of people will just let their student loans be deferred or just let them just, you know, sit in the back burner. You have a little bit of period of time between when you graduate and when you have to start paying back on them. But a lot of times people never revert back to figure out, okay, how do I get this under control and get myself into a position to be able to pay these at a, you know, reasonable rate. So if you call your student loan provider, you can do what's called an income-based repayment plan. This is exceptionally important for people who are in that transitional period, right? You may not have landed your dream job just yet, but you are like, I know I'm gonna get there. I can still purchase. I want my purchase power to make sense. Get on an income-based repayment plan, baby. If you're not making no money, the income is zero.
Yeah.
Therefore, your repayment plan will be low or at zero. So I always say call and see what they can do. I know student loans suck and it's hard, but they do try to work with you guys in some cases if you're committing to pay them back. Now, if you're just like, see you
I'll
later.
pay it when I pay it.
They're gonna be like, no.
No, they can see that. They definitely can see that in your record. Like, there's no way to go around it.
Right.
But I know that lenders use that 1% rule.
I was just about to say to keep in mind that they're not using like the whole balance.
Yes.
It's just that greater 1% of that student loan. So
I'm glad y'all said that. I have a client who's shopping right now, and she went to nursing school, and she just has a ton of student loans, and that was like really affecting her pre-approval amount. She really wanted something higher, but those student loans were like pulling her back. So what we did, they were in deferment, and we just told her to get on that payment plan.
Yeah.
Even if she just pays the minimum every month, anything is better than not paying it at all.
And similar to the other bills, when it comes to repaying, they're going to go based off the minimum. They're not going to say, oh, you owe $50,000, so that's what it is, or divide that by the months. They're just going to see what is the minimum that you owe on a monthly basis, and that's what's going to go towards your DTI. Remember, if you want to keep it P, what do?
Come on.
Keep it at
43.
43.
We know.
I like that.
Yeah. That literally got my client approved when she went on that payment plan. Her pre-approval went up $20,000. So
I love that.
we love
That's
the
good.
increase in buying power.
yes, right?
Okay.
And also, like, for me, my student loans keep getting pushed back. So another thing too, if you are not on a payment plan, then if you have like delay, not a delay, but if they keep telling you that you have more time to
Like deferment.
deferment, then you have 12 months. If it's not like you don't have to pay for another 12 months, they're just not going to use it at all.
Yeah,
Which
it
is
won't
like
count
a
towards
good,
your debt. So
exactly.
yeah.
But another good one, another thing that I feel like is really popular when it comes to people getting pre-approved and they're struggling is car notes.
Oh, people love a new car.
Right.
They buy a new car and want to purchase a home.
At least you bought your car after you purchase your home.
Right.
Please take
That's
notes to
important.
purchase your car. You can literally leave the closing table and go
then
to the
go
car
to the
dealership if you want
dealership.
to, but
I
do not
closed
buy
on
it
Thursday.
before.
I bought my car on Friday.
Yeah,
Literally,
that's
I did the
the
same
thing to
thing.
do.
I did the same thing.
Yeah.
I literally waited a long time before I got my car. Like, I was just getting rides because it's that important.
Oh, I used to pick you up, sis.
I'm screaming. I think the one thing with car notes, though, I feel like typically we see, like, whenever people are looking to buy a house, they probably ran into some type of increase or have been saving for a long period of time. So naturally, like, you want that car, you want that house.
Yeah.
If you're in that position where you have a car with no note, just hold out.
Keep
like,
it.
just wait
Keep
until
it.
after you close. It is much harder
Yeah.
to buy a house when you have a high car note than it is if you have a car note trying to buy a house. Y'all know what I'm trying to say.
Yeah. You get it.
But if you
buy
loaded,
the house, then buy the car.
listen, if you loaded and that income is way greater than that car note, then you know, like sometimes that works, and if it's not new, like if something that you've been paying on, but if you just bought a new car, what makes you think that a lender is gonna go ahead and
give
pre-approve
you more.
you?
Yeah.
Right.
One of my
Brand new
clients
house.
bought a new car. Like we were literally going to the final walkthrough before, and they pulled up in a new Mercedes Benz, y'all.
Oh,
Fancy,
my gosh.
matte. I was like, oh, y'all renting a
Not
car?
matte.
You know why you here? Because they were like
Relocation.
She's like, oh, y'all renting a car? She was like, no, we just bought a car.
Are you
I said,
serious?
oh, what did the lenders?
Right, what did the-
But they were dating, so they bought the car and they were loaded.
Okay.
And they bought the car in the boyfriend's name, the house.
And that's how
in the
Yeah.
And I was like, oh, thank you, Jesus.
That's a really, really good
That's
point.
smart.
Yeah.
Couples,
Do that.
I think you should separate it because I do have a lot of clients that are couples or like fiancés or even married couples who like, okay, the house is only going in one person's name. So if there is a situation where like you need a car or you need a major purchase, put it in the other person's name. It's nothing to do with the house, but the person who's buying the house, do not assume more debt if you don't have to.
Right.
Yes.
And if you're feeling some type of way in a relationship and you just like feel like, oh, that's not my house, just add yourself to the deed. You just don't have to be on the finance and just
Put
add
your
yourself
pride
to the deed.
aside.
Yeah.
That's another
Pride
conversation.
aside.
And you got to think. You really got to think about your priorities. You want a new car or a house to live in.
Right.
I mean, you can sleep in the car if you want because that's what might have to happen.
Period. I think the house is a bigger flex, but you know, to each his
Yeah.
own.
Yeah, the house is definitely the biggest flex. And you can do one and do the other. It's really about patience and time. One thing I keep seeing, though, is the co-signing.
Yeah.
Oh,
And I cannot stand when a
That's where they
client
get
comes
you.
to me like, well, that's not my car. That's my
That's
boyfriend's
so-and-so.
car. Well, unfortunately, sis, that's
It's
now
now
your
your
dad.
car.
And that's just what it is. So co-signing the car is just as worse as buying a car because it's still your
Your
dad.
name
It's
is on
counting
it.
toward you as well. It's just not whoever you co-sign for.
Right.
Yeah.
Right. And that's the same thing with credit cards. That's another thing. People don't take in lightly what they're putting their name on as far as co-signing for another credit card or their credit card debt. Because
Or
that's
you trying to ball out,
okay.
and the credit cards is sky high.
It's maxed out.
They're maxed out. Oh my god.
So
Listen.
when you really like getting pre-approved, credit cards are one things that lenders are gonna look. They're going to use towards your debt. So you guys really have to make sure, like your credit cards as a minimum or under 30% to make sure that, like it's not really affecting your pre-approval.
Yeah.
So what are some instances like where you guys saw that credit cards like really, like played a
because
part
it's going to
in
be that
struggling?
monthly payment for the credit card. So if your credit card payment is like $200 or $300 per month, that's adding a lot. If it's like $30, because some credit cards you don't have a high limit, it's probably low 3,000 something. It's like $30 per month. That's not going to affect you. But once you start getting up there to that like 10,000, and your credit card payment is like sky high per month, it's like a whole nother bill.
It is.
That's where you start running into those troubles. And I understand, like, people go through stuff, and you need those credit cards to kind of like get you through that. But at least when you're doing that, make a plan of like I want to buy a house. You probably are steady now and you're working. Make a plan to like pay that down as much as you can, so that you can get that monthly payment as low as you can.
Something big with the like paying down, I always say, like if you have 5 different credit cards, look at that minimum, right? I had a client who owed about $7,000 on a credit card. I don't know how, but her like minimum payment was $40. She's like, I'm gonna use $7,000 and pay that off. I'm like, $40 is not
I don't think
that
that's
big of a
going to
deal.
do anything.
You're gonna give up $7,000 and it's only gonna give you $40 extra on your DTI. That's not substantial. But she had another credit card where she only owed $3,000 and it was $100 a month. I don't know if it was because the interest rate was a little bit higher, but I'm like, if you're gonna pay off your credit cards to buy a house, start with the ones with the higher minimum payment.
Right.
$20 a month, baby.
You good.
That is not the difference between
Right.
pre-approved and not. So
Right.
go for the ones that's costing you the most on a monthly basis.
And even then, pro tip, so if you have those multiple credit cards, you can combine them. Like you can go to like your local credit union or a bank and finance those in one. I guess you can say it's a loan. Would it be a loan?
Yeah, like
finance it in
consolidated.
one loan, and it could potentially decrease your monthly payment. So I had a client who, in order to like boost her credit score, she needed to like combine a few of her credit cards, and it lowered her debt by like $200 per month, which helped her with her debt to income
Wow,
ratio.
that's
significant.
What do you
Yeah,
think
I
that
didn't
is
even
on a
know
month?
about this.
Combine them, get it financed at a local credit union or a local bank, and it could decrease. It won't, of course the amount is there, you're paying them off, but it'll decrease and help you with your debt to income ratio.
Because
if that is
$200
a
extra
problem.
dollars, how much do y'all think that would
Yeah.
add to a purchase price? If you freed up $200 worth of your debt,
That's
how
a lot.
much? I think at least
good
$10,000,
bit.
$20,000.
That's significant.
Yeah, for
I
sure,
agree.
for sure. So that could be something good for somebody to do.
Yeah.
Right.
For credit, I'm sorry, I was
ahead,
just going
go
to
ahead.
say for credit, like anything credit based, I'm like, you need to talk to my lender. Go ahead and do the application. The lender can run your credit and they will see your whole entire file, all of your history, and tell you exactly what you need to do.
What you need to pay off,
Yes.
how much you need to pay off. They can help you with that.
Right. Of course, I mean, we're here to help you, but we are not, professional credit experts.
We do
Right.
not look at that information. That's your personal information between you and the lender. I do not.
Yeah, I don't touch it.
And their finances.
Yes.
Your money. How much do you have? That's all I need to know.
Yeah, I'm like, let me set you up with my lender.
And again, no late payments.
Oh, please pay it on
yes,
time.
that's important.
Paying on time is really, really important, and do not co-sign for anybody else, especially if you don't know like how they handle if they're gonna make those payments on time.
Right.
Don't trust with people. Don't really trust people with your credit. If it's not necessary. And
I want to bring that tip that Tanya Blanchard said. She came on here about late payments. If you know you have 12 late payments, close the account.
She did.
Close it out. Like that's
a pro tip.
Yeah, go ahead and start over.
That's like one of the best tips. Just close it out, because by the time you really get away from all 12 of those, we're a whole calendar year away.
Yeah. Exactly.
If you know you have like a previous history of not paying that account on time, close it out, sweetie. Start a new one with a new mindset, new energy. Leave that account in the past, because that's really going to affect you being able to get pre-approved again.
Yeah, that's gems. That's really, really important, because I just found out the other day that even though, because I had a client and she was almost there to the 580, even though it's the bare minimum, she was almost there, and then she had a credit person working on her credit up to 580. She got to 580 and then she was ready to get pre-approved, and then my preferred lender was like, wait, the underwriter says that your credit history is actually worse than the credit score. So sometimes people think that the credit score is what really matters, but the 580, a healthy 580, is better than an unhealthy 580, which means like your credit history sucks. Like you have been missing payments.
She said it
sucks.
It sucks.
It sucks.
Yeah, I've seen that so many times. I've had clients who like, my credit should be good now. I was working with somebody, they took some stuff off, and no, when the lender runs that, they will still be able to see some things. So yeah,
that's important.
How would you define healthy versus unhealthy with the credit scores?
So like healthy is someone that's been making, like if it's just like under 580, but she's been making her payments on time, or paying over that minimum amount, or there's nothing too crazy,
Not
like
maxing it out.
bankruptcy and stuff like that on their line, like, and you've been making your rent payments on time and things like that. That's a healthy credit score, even though you're like literally at 580,
like right at the floor to get in.
Right. And then like you have a chance of increasing it, instead of someone that's literally has been disrupting, like just been doing crazy stuff
or not having any history at all on the credit.
Your
credit is low for not having any credit.
Yeah, it's like
that's just
but it's
worse.
so crazy that a lot of people don't even know that they need to build their credit. Like they have nothing in their names. I'm just like, wow.
I think people think you come out the door with an 800 and then you have to do bad stuff to go backwards.
But
I'm
you have
like,
to build it
you
up.
come in at the bottom and you work your way to the top. I think that's a common misconception. They're like, how is my credit low? I never had credit.
You
that's
should
why.
get some.
That's
My mom had me
why.
get a credit card in college just to like not even a high,
me
just
too.
to have it, because
Yeah.
she like, you need to start building your credit. And
Credit
shout out to
history.
you, mom.
Yeah,
Because
I love that.
Mama knows best. My mom
knows
did
I
that.
had one in third grade, y'all. I'm not even
third
joking.
grade.
My dad only got it.
Came out the
My
womb.
dad only
with
got
credit.
it for like that flight thing. We was doing like a family trip. He like, okay, I'm just get everybody a credit card. They didn't know is that I took it to school. And baby, when I say I maxed out, because I thought
Not
credit
at the
was just
Scholastic.
What
like.
were you doing in third grade with a credit
There
card?
was a store by my school called White Hen, girl. They used to sell calzones, sandwiches.
And you maxed out the, you was buying
I didn't
everybody
max it out, but I maybe spent like $90, which
That's
for
a
a
lot
child
for
in
a
third
third
grade, it's like,
grader.
what are you doing? And I'm telling everybody, like, it's on me. Like, it's on me. And my mom
It's on me.
Are you
didn't know nothing about credit, but I'm glad I did that in third grade and not at 30. Because it doesn't make a difference.
I would have been at that Scholastic book fair, okay, cashing out
No,
on books.
seriously.
Why was your teacher not like, how
How you
do
paying for
you
this?
No,
have
that's
a credit
exactly
card?
how I got called. They're like, where are you getting all this stuff from? I'm like, girl, I got credit.
That is
crazy.
you
I got credit.
That's
My
hilarious.
parents, I love them.
And I wanted to ask you guys, I saw something a couple days ago that said like credit, just like the whole concept of credit came about like back in the 70s or something. Like it's really not that old of a concept. So I feel like that's could also be a reason why a lot of people just aren't educated. It's still something new, but I mean, we have the resources to help people.
And that's what we hear, and that's what we do in this episode, so you guys can be on point when it comes to credit, which bring us to our last point as far as things that, you know, that you can struggle is like credit history, but also like how could you fix that? Like how could you fix, what are some solutions for our people out there that has credit problems? One of the things that we've recently discovered, me and Ashley, is about trade lines. So how do we explain, Ashley, I know your client is more, you had a client especially in that situation.
Yes, this happened maybe 2 weeks ago. I had a client reach out. He was ready to purchase, and his credit score, you know, with FHA, you need at least a 580 to get approved. And he had like a 560 or a 570. We're like, okay, well, you're not far off. We can get you up a couple points. So he did an application with my preferred lender, and what she did, she kind of assessed his credit and put him on what's called a trade line. So a trade line is basically you piggyback on someone else's credit. So if you have a close family member or a close friend who has a positive history with their credit or a long history with their credit, you get added kind of like an affiliate or an authorized user. Exactly. So once you get added to their profile, that automatically boosts your credit. So literally within 2 weeks, he reached out to me on Monday, 2 days ago. His score is at a 660 now. It went up 100 points.
Huge. I was shocked.
That's a tip.
That's a tip. I was shocked.
Yes. Yeah. Trade lines are great. It's not for everybody. It just depends on the lender needs to assess why your credit score is so low. If it's because of utilization or because of your payments, whatever it is, there's different scenarios if a trade line would work for you. But that is, I recommend it to anybody who can. It's
That's a question. Do you know if the person you add to the trade line, do they have access to use your phone?
No.
Okay.
No, they don't. Well, you can maybe set it up that way, but no, it's just, you're literally just
background. Like a lot of parents do that with their kids. Now, I see a
but
lot
you can't use your parents' cards.
Yeah, exactly.
I love that.
Yeah,
Hold on, I
trade
got some
lines are
clients
great.
that need some trade
Okay.
lines.
Do you gotta
I was shocked.
Right.
Get on there.
I was shocked when he texted me. I was like, "Whoa,
That's
660
big. That's big.
in like less than 2 weeks. Crazy, right?"
Yeah,
And I
you went
asked
from
further
barely qualifying
questions.
to almost a conventional qualification.
Yeah. Ooh,
Yes.
Fire.
Getting hot.
No, really. And I asked further questions about that, and the lender explained too, like the credit repair person was really great with your client, but also she did like she really made like small disputes about like little collections that he had on his credit that was under $1,000. So when she explained it to me, she was like, you know, if the credit card is like not like $30,000 or $20,000, if the collection is under $1,000, you can go ahead and dispute it and remove it off your credit. And then that's another tip that, you know, a lot of credit repair persons, like people, they do to make sure that your credit jump really, really quickly, especially if you add it to the trade line.
Nice.
I love that. Look.
Yeah.
And it does cost. This isn't something that's free. I think typically it's around $300, but it can go up from there. That's kind of like the base price. So keep in mind you do have to pay for it, but I mean, it's worth the investment.
Yeah,
that's
to
huge.
fix your credit.
Yeah.
I think so. Absolutely.
Especially if you're trying to purchase a home and you want to be a homeowner.
Yes, because a lot of people are still renting and they want to get into a home, right?
And I know Taisha was saying something. I'm glad you said something about renting, because you were talking about how you can use your rent as like part of your.
Oh yeah, of course. Like make sure that your landlord is reporting that, so that that you're paying it on time. If you're paying it late, now
let that go.
I don't even sign
you're
up.
paying it on time, make sure that they're reporting that your payments are on time, because that can positively affect your credit as well.
Yeah, reporting them to the credit bureau. Like, don't call your mom like, hey, Billy's paying his rent on time. Like, that doesn't help. Make sure they're reporting it to the credit bureau. Because it's just like having a credit card. You have a bill that you're paying on time. That should go towards, positive credit.
And when you pay it online, I know when I pay mine, it does have like you can check to like notify the credit bureau that you're paying. So you can do it on your own as well for electronic payments.
Oh, nice.
Sometimes now.
Okay, y'all got
Because it depends on your place, but they sometimes have that option at the bottom where you can check to notify them. So if you're paying it on time, do it. If you're paying it late,
if you're paying it late, just don't even take this tip into account.
Just close your ears.
This one's not for you.
No, because landlords don't really care about those stuff. So if you really care and you know that you're about to purchase a home within the next year, go ahead and tell them personally, like, hey, I want you to go ahead and report this to the credit bureau.
I know at my apartment, I would get like emails asking like, hey, do you want to sign up, to have your credit reported for your rent? And I think that's really great for anybody who doesn't necessarily have a long credit history, that's great. If that will build it. I think on average, when renters use their rent towards their credit, on average, they get like 40 to 60 more points.
Yep.
So
that will make a difference.
It definitely will.
You need that.
Can we cheers to that?
Okay, let's cheers to that.
Y'all had some tips today.
Cheers.
Before we get into our question of the day today, I really wanted to review to make sure you guys got all the tips that we had when it comes to you struggling to get pre-approved with your lender. Keep these 4 things in mind. First off, your student loans, because they cannot disappear. You have to account them. Okay.
Pay them folks
Joe
back.
Biden is not doing what he said.
Okay. Your student loans, then you have your car notes. Take in account when you're about to purchase a home. Make sure you're not purchasing a car first.
Please.
Yes.
Or for anyone else.
For anyone else.
For anyone else.
Until you have the keys in your hand, you cannot get new car keys.
The house keys,
yeah.
Okay. Third point is your credit. Credit is important. This is why everyone say you have to have good credit. What's your line?
Yeah.
What's Jay-Z?
Oh, Jay-Z. Ooh, y'all, what he said?
More important than throwing money at the strip club.
Credit.
Shout out to my girl Ashley.
You have to have good credit, and make sure that you're reaching out to our preferred lender, or anyone, a realtor that can educate you on how you can get your credit to the score that you need to get pre-approved.
Yes.
Okay. So then, Ashley,
Was it my turn?
Yes.
Yes, with the question of the day. So as always, be sure to submit your questions to us via email or in our Instagram DM. You can email us at realtalkatl@gmail, or our Instagram is realtalkatlanta. It can be anything real estate related or personal. We would love to answer your question on the show. So let's see.
But remember to keep it cute.
Yes, we got to say this every week. Please keep it cute in there. So today's question says, what is one goal you want to reach before the year ends?
Ooh.
I like that.
I'm on a healthy journey, y'all.
Oh.
Okay, because I've been seeing you.
I've been feeling great. It's really, really important. I think it really just got to me that, like your diet and your routine. I've never been like a routine girl. So it's like me now getting into a routine. I'm mentally just more ready to attack my day. I'm more ready to, really handle everything that comes my way. So my goal for the end of the year is really have a routine that I love and I can stick to regardless of what's going on.
I love that. Mine is very similar.
Health is wealth. I love
Health
that.
is wealth.
It really is. I've noticed for me, if I don't start my day or have a routine, like I just feel like the whole day is chaotic.
Yeah.
So I'm stepping into what I'm calling like my that girl era. Okay. So I have a routine. I'm trying to do that. Get on like health stuff. I just want to make sure, because I feel like I can't be the best for my clients if I'm not where I need to be mentally and spiritually. So I want to focus on me. That's my biggest thing.
Energy.
Yes, that's important.
Can y'all please take me on y'all journey? I'm struggling.
You took a week
Come
off.
along.
Right.
You do need it though.
Yeah.
Journey. I think my goal for this year is to become a homeowner.
I love it.
I'm in the,
You gotta join the mortgage club.
I'm joining the mortgage
Exclusive.
club. I've already been pre-approved. I'm just shopping around.
Oh, so you didn't need these tips. You already got approved.
I want to be a homeowner. So I've been working for a while.
And you will be.
And I'm finally where I need to be. So.
Oh, that's exciting. That. We have to cheers to that. That's huge.
I was like, I'm not going to say anything.
No, you got to say so.
Okay, because you did that, I feel like you took a leap on faith with your goal.
Yeah.
Yeah.
So I'm going to do the same thing. I was going to go with y'all with the health and wealth, but I know I'm not going to do that. And I want to, but I'm not going to. So one thing that I had posted a couple months back was that this year I wanted to make sure. I'm so scared, y'all.
Why? Like saying it out loud.
Yeah, because once you say it out loud, it's like real.
I know. I was like, I'm
going to just do it, though. I said that I wanted to make sure that I made 30 homeowners this year. And that's a big goal.
That's a big goal.
But I feel like God put that on my heart.
You can do it.
And so my goal is to ensure that I make 30 people homeowners.
And you're doing
I
it.
love
you
it.
right now 25?
29.
I'm at 29 from 18.
Period.
Yes, you're halfway there. And it's halfway through the a year.
I still, anything can happen. So it's just like, God put that on my heart, 30 people. I don't know why 30, but that's just what's on my
That's
heart.
your number.
So that's what I want to do. It's not about the numbers for me. It's about how many people, I hope to, get to homeownership.
Yeah,
I'll
that's
add
very
that to my
impactful.
prayer, sis. You'll get it.
Yes,
Thank
you
you,
will.
sister.
You almost there.
Yeah.
You'll be there tomorrow.
Almost doesn't count.
No, it does count.
Not Brandy.
I love that for you. I like that.
Well, I hope everyone meets their goal.
I was just about to say that. Yeah.
Don't you worry. I'll be in that group chat keeping
I'm so
everybody
glad I didn't say that health and wealth thing because that's not going to happen for me.
Because that
but
was
I'm
going to be
try
kept.
Yeah, now we got to stick to it.
No, like health
But
as well.
Can we shout out our drink? The drink
yes. Shout out to Ways to Blend, everybody.
I
love
Please
it.
make sure y'all follow them. If y'all can't tell, we are in.
We feeling good.
It's doing
We
what it
feeling
needs
good.
to do today. WAYS, the number 2, BLND. Follow them on Facebook and Instagram. And when you support them, you will be supporting their foundation.
Yes.
Nice.
Which actually focuses on mental health awareness
Yes.
and
I
making
love
it
that.
available to the minority community. So,
That's beautiful.
We'll tag
Make sure y'all-
them and make sure y'all keep
and book
it
them for
posted.
your events, the mixology.
Yes.
Yes.
Get you right.
Let's
Trust
cheers
me.
that out.
Cheers.
Cheers to that.
Let's cheers to black-owned businesses.
Yes.
I love it. If I take one more sip of this.
All right, you guys. Thank you for watching Real Talk Atlanta. See you guys next week.
See you next week. Bye.